Good day, you are welcome to my channel. This is Kevin Davis Accounting. So today I would like us to look at the correction of errors and suspense account. So what we are going to look at today. Now, usually when you're doing accounting, there are scenarios which come about, and these scenarios they end up in errors. So we can have things like arithmetical errors, So such errors sometimes make the trial balance not to balance. So we have two scenarios here. One, we have errors that affect the agreement of the trial balance. Okay? And then we also have errors that do not affect the agreement of the trial balance. Now, I've seen some people say errors that affect the trial balance and then errors which do not affect the trial balance. Well, the way of composition, or the way they say it is wrong. Why? Because all errors affect the trial balance. In case, let me give an example. If some transaction was omitted, an error of omission, if a transaction was omitted completely from the books, then it means the trial balance is going to agree, but with a less figure. Okay, so that's what it does. It has an effect, though sometimes the effect might not be felt in the agreement. So not every time your trial balance balances or agrees, it means everything is right. No. Sometimes you might have errors which occurred when you are computing your trial balance, but then because these errors can't affect the agreement of the trial balance, your trial balance had to balance. But we also have errors that affect the agreement of the trial balance. And these errors are going to cause a difference in the total amounts. Remember, our trial balance looks like this. We have a debit and a credit. Okay? Then, if now, this topic that I'm going to cover is really so important and so vital. Now, if you don't have the foundation of double entry, I have videos on double entry. I ask you to go back and first watch. I have 3 videos on double entry. Watch those videos, then come back and continue with this one, because this is like an extension of the double entry. Now, you need to have your double entry principles right. You should know your double entry. You should know the accounts. Then you should come to this, because if you don't understand the other one, then this one will become a bit complicated. So, double entry is the foundation of what you're going to cover here. Now, this is how the trial balance looks like. Okay? And the trial balance is there to check whether we did the double entry right. And what do I mean by we did the double entry right? The golden rule of double entry says that to every debit transaction, there's a corresponding credit entry. To every debit entry, there's a corresponding credit entry. That means every time a transaction has a debit entry, that transaction has to have a corresponding credit entry, as the dual concept states. Now, if that is so, then at the end of that day, when we are having our totals here, they should be the same. Okay? If what I've entered on in A has been entered in B, then these two transactions should be equal. Like the debit, what has gone on the debit has actually gone on the credit also. Then here I should have the same figures. Now, we have errors that cause a change in these figures. Some errors cause maybe the debit side to be bigger than the credit side, or the credit side to be bigger than the debit side. So those are the errors that I'm going to look at here, which affect the agreement of the trial balance. So when we talk about the agreement of the trial balance, I mean that the figures here are different. All right. The very first error I'm going to talk about is what they call the error of single entry. Error of single entry. Now, let me just do it like this. Error of single entry. You know very well that when we are doing accounting, the principles tell us that we should go by the double entry system or we should go by the double entry basis. But sometimes people tend maybe to record one transaction, maybe they have recorded on the debit side of an account, and they forget to record on the credit side of the other account. Okay, for example, we could have something like paid rent worth 100,000 by cash. Okay, now such is a transaction that I've given us, and this transaction means we are going to open up two accounts. One is the cash account and the other is the rent account. So if we are paying rent by cash, it means we are going to credit the cash account and then you're going to debit the rent account. But rather, the accountant only chooses to go and records only the cash account and does this. Okay, and this accountant does not have or does not open up a corresponding rent account to record this transaction. So that means we have only recorded on the credit side, but we have not recorded on the debit side. That one arises to an error of single entry, and it's contradicting to the double entry principle or the double entry rule. So when we get to the trial balance, the trial balance will be greater on the credit side by 100,000. Okay, so this is what they call an error of single entry. Then we have an error of partial reversal of entries. Okay, we have an error of partial reversal of entries. Now, what do I mean by an error of partial reversal of entries? Here, I mean that, you know, when you enter a transaction on the debit side, then you must have a corresponding entry on the credit side of the other account. Okay, for example, I'm still going to use this example here. We are going to still use this as a example. So they say paid rent worth 100,000 by cash. Okay, now realize that this person here actually recorded on the credit side. Then they open up another account, which is the rent account. Now, ideally, what this person is supposed to do, we are supposed to bring the 100,000 here on the debit side in the name of cash. Okay, but then this person actually does this cash 100. He has reversed that which we are supposed to put here. Now, this is what they call an error of partial reversal. So, an error of partial reversal is like we have credited or we are putting an amount on two sides. For example, credit, credit. Okay, someone can even do it on a debit, debit. So that's what they call an error of partial reversal. Now, when we are correcting such an error of partial reversal, what we do, we double the figures and then we bring it on this side. That means it will be cash 200,000. So the 200,000, the 100,000 which is here is going to cast out to the one which is here, and then we shall remain with only 100,000. So that's what they call an error of partial reversal of entries. Then next, allow me to talk about these two errors. I'm going to talk about them at once. We have what they call an error of casting, and we have an error of transposition. Now let me talk about the error of transposition first. Now, when you talk about the error of transposition, just like the way the name says, transposition. Now, trans means change, okay? It means to change. That means there is a change of something. And position, of course, it is a place. So, the error of transposition, it looks at us changing the places of the figures. For example, if you have 216, okay, this is the right amount that you're supposed to record, but rather the accountant records 261. Okay, now it means we have changed the position of 6 and 1. You see, That's what they call an error of transposition. Now, the reason why I wanted to talk about the error of transposition together with the error of casting is because the result is the same. Now, when it comes to the error of casting, here, it's going to either result into what they call an overcast, or we are going to have what they call an undercast. Okay? Now, when it comes to an error of casting here, it means, for example, we are supposed to record 10,000 in our books as an accountant, but rather this accountant chooses to record 100,000. So when you record 100,000 instead of 10,000, this is what they call an overcast. We have overcast our figure by 90,000. Okay, so that's what they call an overcast. Then an undercast is like, still we're supposed to record 10,000, but then this person records 1,000. So it means we have undercast our figure by 9,000. Okay, and then the correction of these errors is that if an error is overcast, okay, that means, let me say it is overcast on the debit side. So you're going to get that difference, which is 90,000, and then you post it on the credit side of the same account. So it means that you're going to have 100,000 and 90,000 on the other side. So when you balance off, you're going to remain with the 10,000. So if it is an overcast, you get that difference and post on the opposite side. Now, if it is an undercast, this is what you do. You get that difference. Let me say the undercast is on the credit side of an account. So you're going to get that difference. Then after getting the difference, you are going to maintain the side. If it's on the credit side, you're going to bring the 9,000 and still put on the credit side, meaning that the 1,000 plus the 9,000 will give us the 10,000. Okay, so that's what they call an error of casting. So this is overcast and this is an undercast. Now, the error of transposition also results into an undercast or an overcast. So we are going to, when we are correcting the error of transposition, we are going to correct it in such a way that it's like an error of casting. Okay, so it's very important, and we need to know these errors by name, because when we are correcting these errors by the way of the journal, we are supposed to narrate, and those narrations, of course, they have to come with the names of these errors. That's why I'm going to take my time to explain the errors, and then our understanding will be enhanced. So this is what they call the errors that affect the agreement of the trial balance. So I'm going to rub off this, then I'm going to come with the errors that do not affect the agreement of the trial balance. All right, so we are still continuing. Now, we are going to look at errors that do not affect the agreement of the trial balance. So, one, we have what they call an error of omission. Now, an error of omission, this is whereby the transaction has been omitted from the books completely. That means we might have a transaction, maybe sold goods to Michael, okay? That's a transaction they gave us. And you find out that this transaction, no account was opened up, okay? And remember, like I told you, the trial balance is going to look at the debit and credit. That's what it's going to prove. So if you don't have that transaction, that means there's no that debit, there's no credit. So that means the transaction was simply ignored. There's nothing of record of that transaction. So if that transaction is omitted completely in the books, then our trial balance is going to balance. Okay? So that means there's nothing that's going to change with our trial balance. The other rest of the figures will balance. Though the figures at the end of the day will be wrong because that transaction was initially omitted. Okay? So the trial balance is going to agree, though with the wrong figure. What I mean by wrong figure is, I mean that that transaction that was omitted was supposed to be part of that figure. That's why now the transactions are going to, the trial balance is going to agree, but with a lesser figure. So that's what they call an error of omission. Then next we have what they call an error of commission. Now these errors, omission and commission, there's a way they tend to disturb students. But you see, when it comes to omission, it is single M, but when it comes to commission, it's double M. Please note that, because there's always a confusion that comes here. Then this one's a double S, a double S. Now, an error of commission. This is where, as an accountant, you record a transaction in a wrong personal account. Okay, for example, you could have two creditors, maybe you have Dennis, okay, and Denise. Now, at the end of the day, you realize that you transact with Denise, but you end up recording the books of Dennis. Okay. Now, this one still have recorded in the personal account. That means you have entered the transaction right. Okay. You have entered it on the right side, but in the wrong personal account. Okay. Everything is right, yes, but you have entered it in the wrong personal account. That means the person whose account you have entered the transaction is not right. So this error does not affect the argument of the trial balance, because either way, if we're supposed to put this, maybe if we're supposed to put in the Dennis account and put in Dennis, either way still, it will be on the same side and it will be the same transaction. Okay, so our argument of the trial balance will still remain valid, will still remain okay, unchanged, it will agree. So this is what they call an error of commission. So it's all about us posting to the wrong account, to the wrong personal account, but we have done everything right, it's on the right side, it's the right amount. That's what they call an error of commission. Then we have an error of complete reversal of entries. Now, remember, the other one that we looked at, it was an error of partial reversal of entries. Okay, but now this one is an error of complete reversal. Now, an error of complete reversal, it says that what you were supposed to put on the debit, you put it on the credit, and what you're supposed to put on the credit, you put it on the debit. So you had to cross. Okay, that's what they call an error of complete reversal. For example, you might say sold goods are worth 4,000 cash. Okay, now sold goods, you know very well that you're supposed to debit. Let me just give an example here. Sold goods worth 4,000 cash. Okay, so that means we received cash from the sale of goods, and you know the double entry says that you're supposed to have the sales account, and you're supposed to have the cash account. Okay, now you know very well that if you sell goods, you're receiving cash, right? But then you come to the cash account and you put sales 4,000, okay, and then you come to the sales account and you put cash 4,000. This is wrong. Okay, now what you have done is what they call an error of complete reversal. So it means our sales were supposed to be on the credit side, but rather we put them on the debit side. And since we're receiving cash, we are supposed to put on the debit side and not the credit side. But we ended up twisting and interchanging what was supposed to be put the other side, we put it this side. Now, the correction of this error is simple. You're just going to double the figures and you bring it this side. You say cash 8,000, then sales 8,000. Why are we doubling? Now, the 4,000 here is going to cross out to the 4,000 here, and we shall remain with the 4,000 which we wanted this side. The same applies this side. So we want to remain with this 4,000. So now in accounting, we don't cross. So all we do is to post on the other side with a double figure for us to come up with this, to correct this error. So by this, we have corrected the error. So next, we have an error of principle. Now, an error of principle, just like the way the name says, it says that an error of principle, you don't know the principles of accounting. You don't know your principles of double entry. Okay, so it means you're going to post, or you're going to put a transaction, you're going to post it right on the right side, but in the wrong class. Okay, a wrong class of account. So that means you don't know your principles. So you have got the right amount of money, you have put it on the right side of the account, but in the wrong class or of the account. For example, we can have things like motor expenses. Motor expenses worth 5,000. by cash. Now, instead of us recording this under motor expenses, you record it under motor vehicle account. Okay? So when you record it under motor vehicle account, remember the motor vehicle, of course, is an asset. Okay? Now you're going to debit it. Even if we are to put in the motor expenses, we are still going to debit it. That means our double entry would have been done right, but now we are in the wrong class of the account. So you're supposed to come back and correct this. So for example, you shall have you supposed to be like this. This is how you're supposed to correct it. Let me say they tell you that you deposited this amount, or you put this amount in the motor vehicle account. So you have your motor vehicle account. Now I'm showing you how we correct this, and shall have our motor vehicle expense. Now, you know very well that the motor vehicle is a real account, and then the motor vehicle expense is a nominal account. Okay, because real accounts record properties which are tangible, and then nominal accounts record properties which are intangible. Now, when it comes to this, ideally, remember, if it was put on the motor vehicle account, it was debited. So for us to cross out this, we shall just come here and say maybe motor vehicle expense, and then you put the amount. Let me say it is 5,000. Then you come this side and you say motor vehicle, and you put the 5,000. These errors are supposed to be rectified, because they might say maybe he deposited the amount, he put the amount in the wrong account. Okay, later on we are going to see that usually they give you that one account was entered right, but then the other account was entered wrongly. That's what causes for us to do what they call a suspense account, to correct these errors. So we are going to look at that when we reach that site. So the next is what they call error of original entry. So what do I mean by error of original entry? Now, error of original entry, just like the way the name says, it means this is an error that is being done in the books of original entry. This is an error that is done in the prime books, or the books of prime entry. Okay? Now, that means when that error is being made in the book of original entry, we are going to carry this error to the ledgers. Okay? That means we are going to make our double entry right, but with the wrong amount of figure. So that means error of original entry is not going to affect the agreement of the trial balance, because if we are going to carry it from the books of original entry, then that means we are going to make our double entry right, but with the wrong figure. Then we shall carry the same figure to the trial balance, and our trial balance will agree. All right, then we have what they call an error of compensation. Now, an error of compensation, what do I mean by an error of compensation? This is whereby if maybe sales, okay, or there's a transaction that you're carrying out, and this transaction, the debit side is maybe overcast by 100,000, then you find out that even the credit side is also overcast by the same figure. Okay, if you have increased the debit side by 100,000, then also you increase the credit side by 100,000. That means the 100,000 has been increased on the debit will cancel out the one that has been increased on the credit. That means you are going to have appropriate figures. Okay, and therefore our trial balance will agree. So that's what they call an error of compensation, whereby the figure which has increased in the debit side has also been increased on the credit side. Okay, so that one cancels out each other, and our trial balance will agree. Then lastly, allow me to talk about the error of duplication. An error of duplication. What do I mean by error of duplication? Now, error of duplication, this is where one transaction, I repeat, one transaction has been entered on the debit side and on the credit side twice. Okay, for example, an accountant might enter sales today in the books today, and they also enter the corresponding, maybe it was by cash today. Then tomorrow morning they come back also and they do the same thing. They enter the sales, the same figure, and also the cash. Maybe they forgot that they had done that transaction. Now, that means you have entered the transaction twice. Let me just give you an example here still. we have maybe they say sales worth let me say 300,000 were, of course, by cash. 300,000 by cash had been entered twice in the books. Okay, so that means when you come, you're going to find that, of course, we have our sales and we have our cash. Okay, so we shall have maybe cash 300, the same figure, and shall have cash 300, the same figure. That means I'm not saying that we might have sales of the same multitude or magnitude, but sometimes we can have the same transaction entered twice. That's what I mean. I'm not meaning that we had to make sales worth 3,000 two times. No, I mean that the person recorded the same transaction twice. One transaction took place, but they recorded it twice. So that means even this side you record sales 300 and here sales 300. So you realize that you have 600, 600. Now, for us to correct such an error, this is what we are going to do. You're going to come this side and reduce by the same figure. So you're going to say 300, of course, by cash. Then you come this side and say sales 300. So we are trying to remove one of the transactions. That means this one will cancel out with this one and we shall remain with 300. This one will cancel out with this one and we shall remain with 300. And that's what they call an error of duplication. So that's how easy it is. So this, it's quite important. It's quite important for us to know these errors by name and also their correction, because later on we shall see how we shall need them to understand in the generalizing. We shall need them when you are correcting. We shall need their names. If you know the name of the error, then it's also easier for you to correct it. Otherwise, this one brings us to the end of the part 1 video of the suspense accounts. Thank you so much for watching. This is Kevin Davis Accounting. Share to your friends. Let them also have a benefit. Tell them there's free learning taking place at Kevin Davis Accounting. Until we meet again, it's a bye for now.